Hello guys, today I'm going to share with you how to start a investment, how to create a portfolio, and is the investment is risky. I'm going to answer some of the questions of how to invest, and then some of the people I notice a lot of people they have the misunderstanding of investment. So let's start. Okay. So disclaimer, I'm not a certified financial advisor. Today is just purely for sharing and educational purpose. Okay, what is the first step? The first step is to understand your own financial status. I have noticed a lot of the people they are trying to ignore or they don't know how to manage their personal financial. So the first step is actually take a piece of the paper and list out your financial status. A lot of the people will think, oh, I want to start the investment. The first step is I want to find a broker, open an account, and then deposit the money, start the trading or start the investment. I noticed that is most of the people are losing the money if their first step is to open the account with the broker and start the investment. The first step is actually to understand your own financial status first. So you have to list out a few things. First thing is you have to list out your monthly income, your full-time job, your part-time job if you have, or the passive income if you have. Passive income can be the dividends that you collect from the stock that you're currently holding. So this is your income. So second thing is you have to list out your debt. If you have the credit card debt, housing loan or car loan, then you have to list out how much you have to pay every month for those debt. And then after that you have to list out your monthly expenses such as your rental fee, transportation fee, or your mobile phone fee. So after you list out all these three, then you have to create your personal cash flow. How to create? This is the second step ready. So second step, create your personal cash flow. This is my own personal cash flow. Okay, first thing is you have to put in your income. So this is my full-time job. Example, I getting 3,500 per month. I do not have the part-time job. I have a passive income of $50 from the dividend that I collect for my one of my Singapore bank investment. So my total income per month is about 3,550. So after that I had to look at my saving. As I'm living in Singapore, so my Singapore CPF monthly deduct is $700. Then my monthly saving is $300 for my emergency fund. Later I will explain more about the emergency fund. So the total saving is $1,000. So the net income after saving is $2,550. Every time we had to think that after we receive an income, we had to first thing is to save first before you spend the money. Okay, so after I look at my debt, I do not have the house, so my housing loan is zero. Do not have the car because Singapore car is the most expensive in the world. So most of the people are using a public transport. So no have the car loan. My credit card loan is also zero. So my debt is basically is zero. So now come to my expenses. My rental fee is about $500 a month. Transportation fee, mobile, food, insurance, and then others. So my total expenses is 1,650. So my income after saving minus my total expenses is my monthly net income is still have $900. So why I had to calculate this one? From here I can know that actually every month I have $900 extra, so I can put this $900 into my investment portfolio that every month I actually can top up $900. Then I can do the dollar cost averaging to buy more of the stock for my portfolio. So this $900 is the every month I can top up. If I have more expenses, let's say in future I already have the house, I have the car, or I have the children, so my expenses and the debt definitely will increase. So by the time I had to redo my personal cash flow again to see how much I can top up every month into the investment and trading portfolio. Okay, step 3, create an emergency fund. Just like I have mentioned that we have to save a certain amount from our income to create an emergency fund. What is the reason that we had to create an emergency fund? To cover you in economic downturn. Example, right now there is a COVID-19 period. A lot of the people lost their job, or they are having a pay cut, or they're taking a unpaid leave because they no need to go to the office. There is a difficulty of their company. The company lay off a lot of the people. Unemployment rate is so high, everything. So if you lost your job, so if your emergency fund can cover you in the economic downturn. So this is very important. So also the emergency fund can cover you for the unexpected event, such as if you had a car accident, so you lost the job, or you cannot go to the job, you are being forced to take the unpaid leave. So your emergency fund can actually cover you in if you have any unexpected event. So how much you need for your emergency fund? So your emergency fund should be at least 6 months of your expenses. Of course, best is up to 2 years, but this is the minimum. Minimum you need 6 months of your expenses. Example, my expenses is about 1,650, so my emergency fund need to be at least 6 months of my monthly expenses. So after you create your emergency fund, then you can move on to the next step. The next step is to transfer the risk to the third party. How to transfer? Is by buying the insurance to cover your health. Okay, I had to explain you why we need to transfer the risk, what kind of the risk that we have. Okay, first thing is, if you already starting the investment, you create a portfolio, you put in a lot of the effort, you put in a lot of the time to search the stock, to find every time you look at the chart, spend a few hours a day, a week, and then more than 10 hours a month to look at the stock. What if suddenly you have the health issue, then you do not have the insurance to cover you? Then by the time you have to take out all of your money to pay your hospital bill or some unexpected event, so all of your effort will go to zero. You have wasting everything, wasting your time, your effort, your energy, everything that you put into the market, but finally you are taking the money, you profit everything to pay for the hospital bill. Or if let's say your family does not cover any of the insurance, if your wife or your children have anything wrong, you will also take out all your money from your portfolio to help them to pay for the hospital bill. Am I right? So by the time you have nothing. So it's very important to transfer the risk to the third party, such as buying the insurance to cover yourself. So this is the basic insurance that everyone must have. First one is a healthcare insurance. In Singapore, we call it Shield brand. So this is a very basic to cover your hospitality bill if you go inside the hospital, so you don't need to pay any cent. Yeah. So personal accident is, I will say, is good to have, but it's not a must, because if you are taking a public transport, you accident, the chance of accident is quite low. And then if you are like a worker, like construction worker, or working in the White House, or you are the taxi driver, then you must have the personal accident. Whole life insurance is also important. Whole life insurance is to cover if you have anything wrong, such as a cancer, or you die in the accident. Why we need the whole life insurance? Sometimes people think, why we need the whole life? Whole life insurance is to cover your family, it's not you, okay? If you have anything wrong, you die in cancer, you die in the accident, so your family can get money. So once your family have a money, you no need to worry about their life anymore. Yeah. So I had to make a disclaimer here. I am not a insurance agent. I also not the financial advisor. This is just my personal insurance that I have to cover everything. If I have anything wrong, I no need to take out the money from my investment portfolio. I also ensure that my family have money for their life, will not be affected at all. So this is a fourth step. If you do not have the insurance to cover you, you better go and find it now. Step 5. Before you go into the investment, you have to understand your personal lifestyle. So how many hours can you put in to look at the market every day, look at the chart, do the research of the company fundamental? How many hours can you do in a week or in a day. So how much risk are you willing to take? Like if you have a 10,000, how much do you willing to lose? 50%, 20%, or even 10% only? If you cannot take so much of the risk, then you better don't do investment, because investment is always come from the risk. And then I had to explain more for the first one. How many hours? Some people, everyone have the different lifestyle. Some people have the family, some people is single. So if you are single, of course you don't need to spend the time with your family, so you got more time to do the investment. Then you can choose to do the investment and trading at the same time. If you are the family, you already have the children, you already have the wife or husband, then you have to spend more time with your children, teaching them, and spend more time with your love. Then you have less hours to do the investment. So by the time, you better choose an investment instead of trading. Yeah, because trading definitely require more times to look at the chart and everything. Okay, so this is the difference between the investing and the trading. So everyone knows this is Warren Buffett, but nobody knows who it is. He is Jesse Livermore, is one of the legend trader in the world. So what is the difference between these two? If you are an investor, you definitely is a long term. Long term means what? You have to buy the stock that is good fundamental to hold for years to decades, even 10 years, 20 years. If you are the trader, then you are the short term. Short term is what? You are in and out between a day or between a few minutes. So this is called trader. Trader, you have to always look at the chart. So maybe every 1 hours, you have to check again. Every 1 hour, you have to check again. For the investor, you can check once a day, or maybe once a week, once a month also can. Yeah. So in the investor, you must have the mindset of is that you are the part of the company owner. You are buying a company ownership. You are not buying the company product. You are the company owner right now. So you must think about this. So you have to go and do the research, a lot of the research to the company. Yeah. So it's less sensitive to the short-term price fluctuations. Means that if in the short term the price will be moved up and down, so you don't care because you are caring for the long term. Sometimes if you want to look at the chart, you can look at the weekly chart. You can totally ignore the daily chart. You just look at the weekly and monthly chart. It will be more than enough for you. Compounding. Investing is all about compounding. Time is your biggest weapon if you are the investor. A lot of people will think that I still young, I can do a lot of the trading. I prefer trading. I got more time, more energy. I want to do trading. I don't want to do investing. Actually, this is wrong. When you are young, your biggest weapon is not how much you have in your portfolio. It's your time. If you have the time, you better start investing now instead of doing the trading. Investing portfolio will be outperform your trading portfolio once you are old. Yeah. So if you are the investor, you are more concerned about the company fundamental instead of the short-term market. Okay, let's look at the trader. Trader is very sensitive to the short-term price, so you have to follow the market price action. I will say that for trader, they will most of the time they will look at the indicator or the price action. They have to follow the trend. You have to pay the commissions because in the trader is always in and out very fast. So one day they maybe take more than 5 trades, or sometimes even 1 month they can take more than 20 trades. So they will pay more money to the broker in the commissions. So they are purely for the technical analysis. They are chart pattern, you see the indicator and the price action AO. So you have to choose between you want to be the investor or you want to be the trader. Some people they do both, like they put their money 50% in the investment and 50% in the trading. So which one is right? Which one is more suitable for you? It's all depend on your lifestyle. How many hours can you put in the market every day or every week to look at the chart or doing the fundamental research? So this is all depends on your personal lifestyle to choose either you want to be the investor, you want to be the trader, or you want to be the both of them. So which one can be more, get more money, more profit in the long term? So the answer is no difference. Okay, the blue one from this chart, you can see the blue one is actually Buck Harshver, is the Warren Buffett company. So you can see that in the, if you have the 10,000 investment and 1,000 investment, then you can grow a lot. If you are a trader, so this company is Dom WMA, is one of the very famous trader. So he actually, you can show that sometimes the investment is outperform the trading, sometimes the trading is outperform the investment. You see, so what is the truth? The truth is you must focus on one area and do it over the time to be consistently, so you can be outperform the market. Choose one direction and focus on. Don't choose so many directions. Put your egg in one basket first to focus until that you are perfect, you know how to do, then you start to be diversified. Step 6 is to invest yourself. A lot of people think that, oh, I don't know how to do the investment, I don't want to do, or they just simply jump into the market and buy the stock without doing anything. So first thing is you have to invest yourself before you do anything. How to invest yourself? You can read the book to improve your knowledge in investment and trading. I will say that reading the books is a very good one. There is a lot of the book in the outside the market. One of the book that I read perfect one is the Adam Khoo. Adam Khoo is a Singapore educational. He is one of the top that book that I read. I like his book a lot. If you're interested, you can go and find out his book and read. So reading the book to improve your basic knowledge first. What is the market? How to do the investment? How to do the trading? After that, you have to find a proper training. I will say that a lot of the nowadays you can see a YouTube, a lot advertising jump out. They say that how much money they earn in the short term. I would say most of them is cannot be worked because it's very difficult to find a proper training. So you have to spend a little bit of the time to go and search their training. So I would say that reading the book sometimes can get more info by looking at those that trading courses, because trading and investment courses is actually quite expensive in the market. So but the thing that they teach is actually very basic. You can actually find all the things that they are teaching from the book, and also you can find all the things that they're teaching from the YouTube for free. You are just spend a bit of the time, then you can get all the information instead of spend all the money. Yeah. So one thing you must remember, investing or trading take time. No fast money in the market. Those people sharing with you how much money they make in a month, in a week, or in a day is because they already spend a lot of the time looking at the market. They already is a professional. So do not expect that you put in $1,000, next month you want to get $1,000,000. It's impossible. You better go and buy a lottery or Toto in Singapore, which is faster. Okay, no fast money in the market. This is you must be remember. So I would like to share with you some of the golden rules that a lot of people are making this mistake because they try to get fast money or they don't know how to do the proper investment. So these are the golden rule that you must be follow. If you can follow this one, I guarantee you that you will not lose the money in the market. First thing is never copy others people trade advice. Some people they say that okay, you no need to do anything, I give you my trade advice, maybe you can follow my trade. Some of the broker platform even offer the people to follow others people trade. If you follow others people trade means you don't know what you are doing. It's quite risky. Means that you are blindly follow. If people lost money, then you also lost money. So it's very dangerous. Never follow people advice. I have seen a lot of the people lost their entire money, their saving, all lost because of they follow others people advice. No free lunch in the world. Must remember. If there is too good to be true, then there is a scam. Never follow those professional analysts to buy or sell. Every time you will see there's those what CNBC, Bloomberg, or those very big news that they say, oh, market is going to crash, oh, market is going to recover, this is a pattern. I don't think so. If you follow those professional, then you're going to die soon, because every time the market is going opposite of those so-called professional analysis, they are estimated. So no one can predict the future. You do not need to follow those people. You have to follow your own financial plan, your investment plan, and then your trading plan. Follow the price action. It's better for you to follow those professional. You can just ignore those professional analysis, the news. Third thing is, never use the leverage for long-term investment. Leverage is for trader. If you are a trader, then go ahead to use the leverage. If you are the investor, do not use the leverage. Recently, COVID-19 in Singapore, the Singapore REITs dropped a lot. And a lot of the people, they declare bankrupt because they use the leverage. They leverage 100 times of their capital. You have $100, but you can buy up to 10,000 or 100,000 worth of the share. Once the market drop, they kena the margin call. They receive a margin call from the broker, and then they do not have the money to pay, then they declare the bankrupt. So never ever use a leverage if you are the long-term investment. Leverage is for trader. Fourth, trading and investing is all about risk management. You get rich if you control your risk properly. So risk management is only where you can get rich. How to control your risk? Risk the things that depend on your personal appetite. Some people, they're willing to risk 5% of their money in one single trade. So if you are okay, then go ahead. If you are not okay, then you can reduce your risk to 1% or even 0.5% also can. So you have to search more about risk management. If you can manage your risk, definitely you can get rich. Control your emotions. Mr. Market always transferring wealth from impatient to patience. A lot of the people, they are having a so-called FOMO, fear of missing out. They think that, oh my god, the price is going up already, so high already. If I not buy now, I gonna miss a huge profit again. Once they buy, market drop. Yeah, why? Because they are fear, they're scared. So they must control their emotion. All the investor or trader must control their emotions. So be patient, wait for the chance. Warren Buffett is always wait for the market to drop before they buy. He will never buy once the market is on the top. So wait, practice your emotions, be patient, wait for the chance to come to you. Don't chase for the chance. If you chase, then you're gonna die. After you have mastered the things, then you can start to diversify your portfolio into the different sector or even different market. Different sector means you cannot put all your money in one sector. You cannot put all your money in the technology sector, because if the market drop, technology will be the first one to affect. You had to split your money into something like defensive stock like McDonald's or Johnson & Johnson, Procter & Gamble, and then you also had to put your money in the technology stock like Google, Facebook, or Amazon. Yeah. Beyond this, if you have more extra cash, you can diversify to different market. Like you can put your money in the USA, also can put your money in Hong Kong, China, or Singapore market to diversify your money in the different market. So if the market, USA market crash, China market can cover for you. So never put all your egg in one basket. Of course, just now I mentioned that you have to put your egg in one basket first until you master. So after you have mastered the investment skill, then you have to start to be diversified. So this is some of the common misconceptions of the people things. Some people think, oh, investment is very risky, I don't know how to do. So the first thing is they think that investment is risky and I better put my money in banks. I will say that it is more risky if you put your money in the bank because of the inflation. The money that you put in the bank, $1 you put in bank today, after 10 years, your $1 will become maybe 50 cents. So inflation will slowly eat your money in the bank, and the bank interest rate is very low also. So no need to think. The only way is you have to take certain risks to start the investment. No free lunch in the world. You want to grow your money, then you must be willing to take some risk. If not, put your money in the bank, fixed deposit. Second thing is, they think the investment need a lot of the money and there is a gain for the rich people. It's not true, because even now, you can buy a fractional share. Fractional share means what? You no need to buy one share. Let's say Amazon one share is $2,600. You can actually buy a 0.1 share, means it's only about $260 per share of Amazon. Yeah, you can just buy a fractional share. Some of the broker is already start to offer a fractional share. You can do some of the research. One of the broker I know is the Interactive Broker. They are offering to the people to buy the fractional share, which is maybe 0.1 or 0.2 share, is up to personal. So investment is not for the rich people. Everyone can start the investment anytime. Because of we have internet, you can just open a broker account within a minute. But before you open a broker account, you must understand your own financial first. A lot of people think that investment or trading is a scam because they read the news. Wow, a lot of the people lose their entire saving. But you must read properly how they lost their entire saving in the market. Are they doing anything wrong? Are they investing the time in the market? Or are they following the people advice? People say, okay, this is a good one, buy. Then finally lost the money. So you have to spend a time. Investment and trading is not a scam. You have to spend a time to do a research, to study and invest yourself first. And investment need a lot of time. People will think that I'm busy, I no time to keep the eyes in the market. It's also, how to say, if you're not willing to spend the time, then don't think about the investment or trading. Even the investment requires less time than trading, you still have to spend a time to look at the company fundamental, like do a research about the company cash flow, company business model, and then how is the future growth rate, everything. So if you want to earn the money, spend some time. There's no free lunch, okay? Some people think investment is very complicated and I cannot cash it. So I will say that nothing is complicated in the world. If you spend time to go and look into it, do a research, try to learn it, then you confirm can cash it. So all these are just a reason that for you to stay out for the market. If you are really want to earn the money, spend the time, read the book, try to watch more video in the YouTube, then find a way, then you can achieve that you target in the market. Okay, so this is all for today. Hope you like the video, and please comment if you feel that any point that I did not indicate, or you have any suggestions for the point. Thank you very much and hope to see you again. Thank you. Bye bye.